following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now.
Welcome, folks. It's Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials down 31. Nasdaq is off 18. You get the Nasdaq is off 18. S&Ps are off 3.5. Gold. We got gold up by $11. Silver is up 20 cents. Platinum is up 5. And King Dollar is down 249 ticks. Folks, if you haven't test drove the Nadex platform, come over to our website at TFNN. You're going to see the banner on the top, on the side. You can bring up the platform right now. They'll put $25,000 of paper money into your account. You can see how dynamic this platform is. This morning, even prior to 9:30, we had the jobs number come out at 8:30, of course, and what you had, the dollar itself did 600 tick swing. Now we're up to an 850 tick swing, which is just amazing. Gold went the other way. S&Ps went the other way. Our man, Mr. Darrell Martin's with me, and, of course, each and every trading day, 1 to 2 Eastern Standard Time. He does an outstanding program. He specializes in the Nadex platform. He has an outstanding scanner. Now, what the scanner is, folks, is this. So once you bring the platform up, you bring it up, come over, you can test drive the scanner, 30 days, absolutely free. And what that does specifically is this. It's not going to tell you where to go long or short. What it is going to do, is that when you decide which strategy you would like, it gives you the best contracts for the best reward versus risk inside the market. Darrell Martin, what's going on?
Hey, man, how you doing? This is been got a love NFP day, right?
It's intense, man. I mean, there's no doubt, folks. If you're in front of the screens out here, it was you could be this morning, okay, on the Nadex platform. It didn't matter whether you're a bull or a bear, as long as, and Darrell goes through this each and every trading day when he's on his program. It wouldn't have mattered which way you went, as long as you went there, that you had your order in, moving them out at the same time, which you should always do your profit, okay?
Right.
Because the bottom line is that it was, and we've seen this happen before, but the bottom line is that both sides, if in fact you had them, guess what? And that's really unusual in the context that you can trade, that both sides can have a win. And what we had here, and specifically I'm talking about, it would be the gold or the dollar or the euro. Whatever way you're going on that, folks, okay, the bottom line, you had it. The reason being is that we had the dollar run down to, the first rundown was to 87.81, and then it popped, and it popped up to the 88.31 area. Now it's going to basically, but then it basically took out that swing low. Gold just went the opposite way. We had the expansion in gold. We got down to the 1630 number. It blasts up to 1159. You go back down to 1147, and right now it's building cause for higher price. So no doubt dynamic. And the S&Ps, what's going to get intriguing out here today is that the S&Ps themselves, they have been hanging at this level. They haven't been able to basically break out of it, where the Dow has. The Dow has broken out of it. And the level that we're really talking here, the S&P, the cash S&P has to come back about another 16 points. I'm not using the spike that was out there, meaning on the 19th, and the spike on the 19th is 2019. The reason I'm not, folks, is that most of the time you're trading out there somewhere around the 2006 to 2010. So that would be the range that I expect you have to get back inside to in order to get down to lower price. So there's no doubt. You talk about well, we know it's the jobs number, but what was intriguing out here is that every jobs number doesn't throw the volatility into this market like we had this morning. I guess it has to do more so with this dollar move.
Right. Yeah. I mean, a lot of times we usually get like a directional move on the NFP report.
Yeah.
Like FOMC is always like multi-directional. but just because it's an interpretation of a statement.
Yes, yes.
But the NFP unemployment rate, I mean, that's a hard number, solid number. So usually that one just sort of takes care of itself.
Right.
But it was some insanely volatile swings going on.
Oh, and I expect, folks, that this is not going to stop. You can see that the volatility inside the currency market. Let's go over. I want to go over to the dollar index for a second, because the reason being is that you're right next to. So we hit 88.31 today. Okay, so you're right next to the swing point that it's been trying to get up into. And we've been doing that for the past 7 months. That swing point is 88.80, and it hit 88.31. So it's going to be intriguing that, is that enough? We'll find out. And the way that the confirmation for that, folks, would be twofold. The confirmation would be, number one, would be looking for the gold contract to get real juice in it today. It's up, but the juice is, and real juice would mean that you take another leg up as we're getting into the close. We're at 11.54, and if you took a leg up to 11.62, it would be like, okay, man, now you have some big wide price spread. You get the accelerated volume. We'll see whether that is what will turn that dollar index, meaning coming back. And as that comes back, is it coming back with lighter volume and just building cause for higher price? But if we go over to the euro for a second, because these trades, what's so cool about, folks, is that when you're talking currencies, there's not a lot of ticks that you need to be in the money very quickly. So what happens is that depending what contract you want, these price spreads here are just insane. I mean,
oh, you talk about the spreads on Nadex?
Yeah.
Yeah, they're really you can put up so little risk in comparison, to what you got to put up to actually trade currency.
Right.
And then having the capped risk on them and being able to trade during these insane times. Yeah, you could definitely cap that off.
Yeah. And you know what I've found is that what you're normally giving up, folks, okay, this is beyond an average. You're giving up maybe 16 to 20 ticks. But 16 to 20 ticks for what you're putting up versus what the reward would be is nothing, okay?
Right.
And when I'm talking about risk versus reward, you're talking about realistically putting up maybe $50, and the other side of that can get you, well, the ultimate reward would be 50 or about 500 or 600, but you can't expect the 500 or 600 because the spread is way too wide. Currencies don't move that much. But you can expect 50 to 150, 175, 200. And what you can't do, okay, so when you're trading this platform, folks, which you definitely don't want to do, what's funny, Darrell, is that with the small gold stocks, right?
Right.
What happens is that, you hear all the time, with gold stocks in general, folks, I look for point moves, not percentage moves. And the reason being is that the aspect that when you're dealing with stocks that are $8, $10, right, they always move 10 or 20% like nothing, okay, 30%, okay? So if you're looking and you either basically stopping out or taking money at those levels, I just don't think it's applicable because you're dealing with something that's too small. Well, the same is applicable when you're dealing on the Nadex platform with the aspect of what you're putting up versus you're making. You'll be up 100% in a heartbeat, okay? Meaning that because you're only putting up $50, okay? And all it has to do, depending on the time frame when you're going into it, it can tick up another $50. So what you want to be looking for is that you're saying, okay, if I'm putting up the 50, is it going to be 150, 200? And my point is that, yes, you could, it can back down on you in the 50, but guess what? You have the hours with you. You know what I mean? So it's funny, Darrell, sometimes when I look at that aspect, I was saying and I was dealing with that this week, I'm saying, well, maybe I should take my money right now. Do you know what I'm saying?
Right. Oh, definitely.
But, but in that context, I'm saying myself,
you're also trying to hold on and not just, take it off too fast.
Yeah, because 50 to get 50 is very quick. But so percentage-wise, in my own head, I'm saying to myself, man, this is a trip how this works, okay? But the reality, folks, is that you should be doing a 3-for-1 setup, and you should be able to get close to that, because when you're putting that up, you're going to be losing too, okay? If you just go 1-for-1, that's a different ball game. It's not a different ball game when you are selling them, okay? Or you're doing them very close to expiration. That's a different deal, but So it's a very dynamic system, folks. You can check it out right in the front page of TFNN. It's going to be interesting out here today to see how these markets can handle it. What has happened overseas, folks, is the DAX is falling apart. And the DAX in general loves to basically, well, the NASDAQ loves to follow the DAX. So this one's going to be intriguing. The reason being is that, you know, the high in the DAX just in the last 6 months is 10,000. Well, even on the counter trend bounce after going down to 8,300, the DAX could only make it to 9,400, and now you're at 92. You know, so that's basically saying to me that the DAX wants to go south. We'll see how much longer they can hold these markets up at these levels, but that S&P's got to get away from these highs. You know.
Yeah, well, that's highs are a lot of times I've found personally that it's really when it's just on those highs.
Yes.
You get a lot of choppy days.
Right.
You know, personally, this is my own personal trading experience. Just at least recently, the last year, you just get a lot of choppy days when you're right on those highs. You know, get me off the highs. We get some. You know, I'm not saying we haven't had some decent swings and movement, but it seems to be like more and more days of chop whenever.
Oh no, listen, man, I absolutely agree with you. When I woke up this morning, let me tell you something. When I woke up this morning, so what happens, folks, is this. It is exactly like Darrell just said. You stay choppy at the highs. What happens is if this is going to take a leg, it's going to take a leg, okay? And you're going to get wide price spread, accelerated volume, when that comes in. And Darrell, when I woke up this morning, I'm saying to myself, oh, man, is this the day? Is this? Because, see, the bullish part, okay, I'll give you the bullish part of staying at highs is that the longer you stay at highs, guess what? The higher the probability is that you're going to get that wide price spread. It just takes off. And then you get a trend going, and because we've been at these highs now for a month and a half, it's like, okay, now you can get a trend going for another 6-8 weeks, and of course we're at the end of the year. So that's the bullish part. The bearish part would be that you can't hang here, and the longer that it can't break out, then it's not a higher probability, because when you're at highs, the higher probability is you're going to go higher. Then the bearish part, though, is that you can't break them up, so is, in fact, a sell going to come out of nowhere, and as a bear would say, the trap door opens and everything falls through. You know, so, but this morning when I woke up, believe me, it was like, I says, okay, am I going to wake up and the futures are up 25 points? You know.
Oh, I know, right?
Yeah.
So you never know what you're waking up to these days.
Yeah, no, that period. But what you did have, what is encouraging is the fact that what has seemed to happen is that the market now loves a strong dollar and it doesn't like a weak dollar, which is pretty amazing, you know. So now we just get the opposite of what's been going on for years.
Yeah, completely inverted.
You stay right there, folks. Darrell Martin, Tom O'Brien, we want to hear from you. Our phone number is 877-927-6648. Dow down 28, NASDAQ off 20, S&Ps are off 2. Really a flat market. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trade patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials are down 35. You get NASDAQ off 24. S&Ps are off 3.5. And if you're over at the Nadex platform, folks, and you're looking at that trade-wise out here, it's going to get interesting. And if we take a look at the gold market first, okay? So gold right out here, we have a Friday in gold. And Fridays in gold are dynamic in the aspect that they can kill the market, and in this particular case, the market already went down to this 11:30 mark. We're at 11:55, and, you know, the way this is set up, you have two different aspects. You have the first aspect that it wants to test the 11:59 from this morning, but the way this is set up right now, which is really getting interesting, is that I think this 11:62 is going to be game. So inside that context, okay, there's a lot of different things inside.
We're on the same page. I'm looking at 1163. So,
yeah,
yep.
I was just looking at the binary. I'm trying to, that binary, the 1160, is not bad, right? That's one of them. That's the one at noon, and then so if we pull up the one at 1160 at noon, it looks like it's $17 to 20.
Yeah, we basically have like a weak resistance, like right at around 1155.
Yeah, I know.
And so that's the level. Like I was tempted to put a long trade in there early, and I was like, you know what? It's too weak. Could easily break down.
Yeah. And
I was like, but it still is a resistance, you know. So I don't necessarily want to go long. And then it's one of those, just like, it just felt like too much of a no man's land. But I knew price would at least hesitate there.
There's no doubt.
And then the short, and I think it's going to go up to about 1163, right around a deviation move, going back and looking on historical levels and price levels and everything else. And that's where I see a pullback happening.
Yeah, and what's going to be cool here is that let me see. Let me look at that daily. So if I look at so you get 12 o'clock, we're at 10:36. And see, what you have here, folks, see, it's going, man. See, $4 isn't much in the gold market after you've already gone up $26. This thing wants to, you know what I mean? That's what it really comes down to. So, in that aspect, that was, what, $19 for $81 on the new one.
It was a massive volume spike, so it's going to go up there. I think what's going to happen is it's not going to break it with any kind of significant volume. It's going to trail up lightly. We're going to hit that 1162, 1163 area and then pull back.
Yes, and we just went from 17 to 25. That was quick. Interesting. But that would be the number, folks. And that's a very inexpensive trade. You know, you only have an hour and a half on it. But that reality is not bad, man. You know, that's and this is where what is intriguing here, Darrell, is that this is where there's no doubt inside the commodity market. You do want to get a feel of how these commodities move, you know, because what we've had thus far is, in the gold market this is, okay, is you came off the bottom with a vengeance.
Right.
You have the spike up. It's not, after the trashing that gold has got done, it's not a big deal just to have a 20-point counter-trend move, or in the course of a day, a high to a low of $30. That's not a big deal, you know, particularly because we've seen that the dollar has already done it. You know, the dollar now has had a price move of over 950 ticks.
That was, yeah, dollar index was insane.
Right, and see that, and that correlation there. That correlation. That's why I'm bringing that correlation back to the gold market, because what you have with the dollar is this. So watch this. The dollar itself. Now this is where you can get a clue. The dollar itself is at 87. The index here, 87.30, 87.83. Well, the spike that gold hasn't hit yet, the dollar is at. So when you're looking at that correlation, it's like, hey, hold it, man. The dollar's already there. The dollar wants to break that spike. That's saying that gold wants to at least get to the spike, number one, and we may break it. You know, so when you look at those correlations, that's important to understand, you know, what you have happening there. Because those correlations, the dollar and gold is direct, you know, particularly...
Okay. Okay, so you're saying the spike that we had on the dollar index has already got back down to, but gold has not yet got back up to its spike.
Exactly.
At least a couple points. I mean, it's almost a point away now. But as we've been talking, it's been heading on higher, about 4 points. Which is a nice $40 move. You know,
it's huge.
So you have 40 tick moves, $400 on, you know, 10 contracts or one contract on gold or whatever. Right. Yeah.
And the dollar index is breaking it down now. Now, what we used to do in the 90s, in the early 90s, every really day trader would be trading off the bonds. I'd trade off the 30-year bonds, okay?
Right.
And that's all you're doing here. You're looking at one, basically, vehicle to trade another vehicle. That's what you're looking at. And in this case, and that's unusual that you can have this much of a, you know,
nice lead to a wagger type thing.
Yeah, exactly. You stay right there. Darrell and I are coming right back, folks. Dow's down 40, Nasdaq's off 26, S&P's are off 4. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow Industrials down to 46, NASDAQ off 28, S&P's off 5.5. We got our man, Mr. Darrell Martin. We're growling and prowling out here. Now, we're looking at the gold contract, folks, and as we were on break, the baby went up and hit the 1161.50 area. Yep. And that same binary we were looking at, just so you can understand how these things work and how fast they can go. You know, when we first started that, it was at 1760, goes up to 20, 22, goes all the way up to 50. Okay, of course, as it hit into that money. So now, where do we stand right now? One of the tigers in the dinner was saying, okay, we don't have a lot of volume there. We don't. What happens is this. If you happen to be watching Tiger TV, or if you're in your car, I'm going to explain it. The top of the downdraft that was created yesterday, that top number, folks, is 1162.40. So the correlation was that, okay, the spike from this morning was this 1159. So when Darrell and I were talking, we speculated, okay, it's going to hit the spike at least. When we were looking at it, it's like, okay, a normal place for it to hit, it would be 1162. So it hit the 1161.50. I happen to use a 10-minute basis of how we're going into it. When you have a spike that is as large as we did this morning, you can't expect that you're going to get higher volume on the 10-minute over that spike. That's just how it goes.
Right. Now, I talked about that, too. I said we're probably going to have, like, light volume going through that level.
Right. Now, so how do you deal with it? So watch how you deal with it, which is really cool. Gold's going to go a lot higher, folks, okay? I mean, today, too. But watch this. This is why. So when you get over it, right, what you're looking for then is that, first off, you're looking for what is it coming into? And we're coming into 11,000 contracts, okay? We just did 100% move for move. We're dealing with 6 minutes into it, and we do have an expanded deal. We don't have it anywhere near 11,000, okay? We're only at 7,000 right now. But at 7,000, that's saying we're going to do about 10,000, maybe 11,000 coming into it, okay? So that means that you're into it, and you have juice behind it. Now, in order to get over it, where the correlation comes in is this. What you're going to be looking for is you're going to be looking for a slight back down with light volume. You get a slight back down with light volume. This thing will not only launch it'll close out somewhere at 1170 at the end of the day. So it's going to be interesting watching that correlation. Now, what we're going to do, we're going to go right back to the dollar because we know we keyed this off the dollar index. And what had happened, what we were saying, is that the dollar was already generating, saying that, hey, guess what? The dollar's already there, and you can see that we were doing this live. You had like a good 2 or 3 minute lead, which in the marketplace you don't get 2 or 3 minutes, folks. Okay.
You had about a 20-minute lead, actually.
It was a good one, man. And that and what happens is that when you get them, you got to take them. Okay. So where do we stand? Well, where you stand thus far in the dollar is 87.81 is your high volume downdraft. We've been underneath it now, and we're 7 ticks above it, but we've been at that level for way too long, meaning we've been there for 20 minutes. Okay, what that's setting up, folks, is that's setting up that you go back to the beginning of the updraft from yesterday, which is 87.40. That would be saying that you can get down another 600 ticks in the dollar, which would be a mind blower because that would almost be 1 full point. You get down 600 ticks in the dollar, you're going to see gold up at that 1170. So that's the correlation that you want to be looking at when you're laying these trades on, because what you have is that you're getting a confirmation or a denial from one indice or one vehicle from the other vehicle that you're trading with. You know?
See, I'm looking for the denial for today.
Yeah.
So
it's all right. The cool thing is...
I'm looking for the short thing on gold today. So I'm like, I don't think after NFP and lighter volume, I don't think we're going to break that much higher.
Well, the cool thing is you're going to get an answer.
Yeah, one of us is going to be right. But yeah, it may not even get up to the level to fire off. But yeah, I'd make it pull up to 1163. I'm making it get up there, and I'm looking for a short on that, and targeting 1158 and 1154 both.
Okay.
We got to stop up at 1168 on it.
Okay.
So if I'm using a stop, if I'm using a binary, I don't have to worry about it. Using a
right.
I don't have to worry about it.
Right.
But just for those that are maybe looking at futures. But I definitely think we're gonna have a break. I mean, this thing is rated to launch up. I agree with you completely on that. I just think after NFP and after everybody getting exhausted on this order flow, it's going to be pretty hard to push it much higher. Have you seen that on big news days where there's just so much order flow, so many stops are nailed?
What happens in the gold market, okay?
Yeah. And you're the gold expert. You've traded gold.
Well, it's just, this would happen just in the commodities and in the futures in general, right? So picture this. If you're sitting on the floor, it wouldn't even matter if you're on the floor. If you're just a large trader in the commodity space itself, in the future space, you're sitting there saying, okay, gold's already got killed. The market itself, do you want to trade the S&Ps? What do you want to trade? Well, sitting there is like, no. Gold's already got killed. I want to pile on the gold market and bring it up because we know that it hasn't got destroyed down. So the easiest way to make money for larger operators out here today are saying, okay, we're going to flip this thing around, we're going to push it up, and we're going to...
There's a whole lot of stops above the market basically right now.
Oh, it's the easier trade that everyone's there to make money. It's like, okay, you already got washed out. Now, gold in particular, because of the fact that everyone thinks it's going to go to zero, that's an easy...
I'm not long-term, yeah.
I'm just talking about in general, okay? I'm talking about public perception versus what traders actually do. Whether this is strictly that you've had a commodity that's got killed, okay? So gold, just in the last 2 weeks, folks, has gone from 1255 down to 1130, okay? When you can't bust it down, everyone's going to turn around and say, give me 100 contracts, man, we're going to bust it up. It's perfect. you're going to have everyone scrambling. You're going to have the shots scrambling. You're going to have the public scrambling. You're going to have the public running in saying, oh, no, I missed it. I missed it. I missed it. That's what you have happening here. Do you know what I mean? So.
Well, and now we have a different dynamic where now we actually have the dollar index is pulled back a little bit from that spike, and the gold is actually above its original spike.
Right. And
that was more like, so that was a good example of an edge case where you actually get to see that leading factor where it's not just like really close.
Big time. Yeah. Big time. And so watch where the correlation comes down. So the correlation now, so you're getting a counter trend bounce on the dollar, and so watch how subtle this is. This is cool. So the last 10-minute bar on the subtle on the dollar, right, folks? It didn't break a low, but what it did, it expanded in volume as we got to 87.76. So that's saying it's going to be back down there. Now your confirmation is that if it stays flat up here, if you get lighter volume on this bar, okay, that's saying that, oh baby, here we go. And meaning when I say here we go, that means it's going to go against its strength from yesterday, from 2 days ago. Yesterday? What day is today? From yesterday. At that 87.40, which, by the way, is a normal retracement even in a market that wants to get higher. That's what's really bizarre. You see what I'm saying? Which is really cool, man. So, when you put these together, I tell you, Darrell, I love doing this program on Friday. I do, man.
Well, we get some great gold setups.
What happens?
It's a Friday on top of that.
It's Friday, okay? Yeah. And what you have, it seems like, there's always some type of news that's going on, which makes a big difference, too, so.
It makes it a lot more exciting when you get some news moving things around.
There's no doubt, man. There's no doubt, and so see, we're at 1160. See, it's going to be nothing, okay, and here, let me pull this up again. So what you're going to be looking for now. So
at the same time, we got dollar index pushing higher with it. So what does that tell you?
Okay, so now here's where the shift comes in. This is the trip, okay? So watch this. What happens is that anyone that can get this going, right? The bottom line is that this is like nothing's a no-brainer in trading, but you're so close to this the 1162 right now. It's like, whether it's a Goldman or Morgan Stanley or Citigroup, someone down there is going to basically throw 200, 400, 500 contracts into this because they know that the swing point is up at 1172. So they're going to whack it. They're going to whack it, and they're going to say, okay, let's see if we can get it up to 1172. Now, folks, will already have their orders in to sell. Okay? That's how this thing shakes out. When I'm in there, when I'm doing this, if I'm going to whack it, I'm going to have my orders in to sell already. Because what happens is that you whack it, you have the orders in to sell simultaneously, it gets up there, end of the day, bye, I'm going home, I'm going to go get another boat, that's it, done for the day, okay? So look, we're 1164, someone's doing it right now. I mean, that's the trade,
Getting whacked.
It's a trip, man. I'm telling you. You don't get these a lot, but when you do get them, folks, you want to take advantage of them. Okay, that's kind of how these things get set up.
Now, 1164.2, by the way, is also a one deviation move.
Right. So they're gonna, but you can see that the swing point's much larger. So they're gonna take it to the swing. The sells are gonna be, a dollar below the swing. There's gonna be, You're not going to try to get it all. I don't try to get it all. I basically try to get out before someone else is getting out. So whether it's $1.50, $1.50 before that, when you get large moves like that, and then it's going to depend on. Let's see, what time is it? No, 10:44. You're not going to see a lot of movement after that, folks, because what's going to happen is that at 10:45 on a Friday. If you can be done at 11 o'clock on a Friday, 11:10, and you made the VIG, depending on how long you've been doing this, you know that it's only a matter of time that you will lose money, too. So I just call it a day and say, hey, good week. Let's go. Let's get out of here, man. There's always another trade, so.
Just enjoy the party, move on.
Well, it's because every single time you put your money at risk, you put your money at risk. You know what I mean? And that... the volatility out here this morning is perfect, and what ends up happening is that if you take advantage of that volatility, everyone else will come in after the fact, and well, you know what it is? It's, okay, you can just take your deviation levels, right? And if they have you scanned with deviation levels, we know not to get in, okay? But unfortunately, that's when the public gets in. Do you know what I'm saying? Because they say, oh, listen, it's like the it's moving. Well, it already made its move, man. You know, now it's time to take a vacation. You know?
Exactly. Back off right here. This is where, you know, a lot of times you expect a flip or whatever.
Our sideways, the energy's out of the marketplace.
Well, and then the beautiful thing, of course, if you're hedging with gold spreads or you're shorting gold spreads or you're using the binaries, like, you're not really worried about that pop and drop.
No, you're not. There's no doubt about that. I mean, look at that. That's amazing. So when we started, which is only a half hour ago, folks, that binary is at $17 and it's at 78 now. Of course, it has to be at 78 because 1160 is all you need. So, and what you have there is that, you know, bottom line is that you don't have to stay. You don't have to stay in that. You can just take your money and leave. That's it. Bye. You know. So it's wild, and that's without the here. So let's go over to the dollar for a second here. And one sec. DXZ4, because now this is where this gets interesting. So the dollar hasn't croaked yet. Gold is going, and see what that's all about is that they're just piling. But you watch this with the dollar index too. What's happening is that
it's climbing. See that?
Yeah. Let me just see something. You get 7 minutes. So 7 minutes. We did 1,400 contracts, and right now, yeah, this is good though. Watch. So we did 1,400 contracts the last 10-minute bar, and we got down to 87.76. Right now, we've only done 540.50. So that's what you're looking for to set up that you will get lower lows again, because now you're basically coming into a bar that has 2,500 contracts, and you're only coming in there with 560. You know, that's not going to be enough juice. Let's go to Mark in Fort Collins. Hey, Mark, what's going on?
Hey, Tom, how you doing?
Doing great, man. You having a good day out there?
Well, pretty good right now. So let me tell you what I did. The other day I got into Nugget, which is a triple long of the GDX.
Yes.
I got in early.
I remember when you called, yep.
I got in at like 1850, watched it go to
man.
20 bucks, and then I got stopped out when it got back down to 18.
Okay.
And then I held my nose the other day and bought it at 988.
Yeah.
And really taken off. And I'm kind of trading it by way of the GDX.
Okay.
And so right now it's into that big down bar.
Yep.
From the 30th. Well, actually Nugget isn't, but GDX is. Or Nugget's getting close there. And so I'm looking to possibly see if it'll get back to the bottom of the bar from the 8th, which is 2011, which had 114.
Yeah, well, that's where it's going. That's where it's going.
That's kind of what I'm playing that, and so I'm hoping to get it back up there and then let it take a breather.
Now, so watch this, folks. This is really cool. The way that this traded yesterday, the GDX, is telling you that it's going to go higher. Huge volume. We did 103 million shares. You didn't get to a lower low. That 103 million shares was going into 103 million shares. Right there is your indication. You know, that's pushing a swing point with volume. That's what it's doing. You got to remember, a gap and a gap down is the same as a swing. So now what has happened is that we are at 1817. What you want to see out here today, Mark, is that get further into that 1816 bar. The further you get into it, the quicker you're going to get that. And that's the high volume swing low. That's real price, which is $20.12.
Okay.
Have a great one, man. Stay right there, folks. Darrell and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us. Don't forget, folks, every trading day, Darrell is an outstanding show right here at TFNN, specializing in the Nadex platform. And what he does specifically, folks, okay, is so dynamic because each and every day, particularly at the beginning of the week, he sets you up about what the news events are going to be for the week, what the trades would be, what would look like on those news events. And when we're talking the trades that he's setting up strategies, folks. And the strategies basically can put you in the money no matter which way the market is actually going. And that's what makes the strategies that he's setting up is so dynamic. You know, I was listening at the beginning of the week, this week, and there was so much news this week. I mean, right?
Like half the show was just like, okay, well, here's what we got, and here's what we got, and here's what we got, and here's what we got. Yeah.
But that was so cool, man. I mean, it was awesome, man, because, you know, you're saying, you know, not only what you got, but you're saying what you're thinking, the type of strategy that you were going to basically put in place.
Exactly. I was like, we're going to straddle these. We're going to do or neutral trades on these. And
right.
Even for those out there who aren't trading news, like to know when the news, like you're still trading the news if you don't know about the news, right?
Well, yeah. Oh, so big time.
There's still traffic on the street if you're crossing it, whether or not you are riding the bus.
and in fact, what there's no doubt, you know, between the European Central bank between Japan and our own, the bottom line, it's important to know what's coming out, not just in the United States. And he walks you through that, folks, okay? And it's crucial now. I mean, it's a one-world market, man.
Yeah, I mean, it's like, you go, because, I mean, all these currencies impact the dollar, and the dollar impacts gold and oil and, you know, obviously all the stock indices and fundamental outlooks. And like, you got to know when it's happening. So when you're trading, just to know that it's there. And then part of it is I talk about expected movement.
Yes.
And so even if you're just a directional trader or whatever, you know either when to get out or when to hedge or, you know, when, hey, probably, you know, we don't expect more than 30 pips on this thing.
I'll do nothing. You got it.
You know, because sometimes people will go in and they read these FX calendars.
Yes.
And they rank everything as high. You know?
Okay.
High imports, high imports, high. And yeah, it is like long term. It is a high important fundamental news announcement for that currency.
Yes.
But that doesn't necessarily mean it's going to have a high impact on the currency in the short term.
Right.
You know, and so that's sort of a little bit of a misunderstanding the way they put that out there. And so I talk about, okay, these, usually we're seeing like 20, 30 pips over, you know, an 8-hour period.
Sure.
You know, so let's take advantage of that and let's do a little range-bound trading. Or this one, you know, right here, we're talking about like pound or whatever. It's like, hey, this pound report, like whatever, Euro press conference, that was the big straddle this week. I was like, we expect this thing to explode. And, I mean, on Euro, we needed like, you know, 90 pips. It moved to 125 pips. We took a straddle on it, perfect trade, worked out really well. And so just laying all that out. So
man, look at the movement. That movement was insane.
I know, and I got 40 contracts on short right now. I'm like, come on.
Seriously, man.
But yeah, I went in there and got that. I let it pop that deviation a little bit.
Okay.
Hopped on in, went short, 40 contracts. They're a tick wide on the bid offer, which is awesome.
It's huge.
And so I'm going to take off profit as we're going down, hitting my targets. You know, don't got to be greedy there.
Yep.
And but here's the beautiful thing about this. Okay, here's what I want you to see about like all the listeners here. 1163.2.
Okay.
Okay, my ceiling is 1165.
It's huge. I know.
That's 17 ticks. Okay, I mean you got 1164 or 18 ticks. So I guess it was by entry price. Yeah. So 18 ticks of risk. $18.
Right.
Or on a gold contract. So now if I go in and I did that on. I have to do 10 of them, okay, to trade gold futures.
Yes.
To make it equal to a gold future and be worth, $10 a tick, right?
That's 100 ounces, folks.
That's $180 of risk on a full gold future with no stop loss from now till 12 o'clock.
It's amazing.
Like, how do you get better than that? Why are you not trading these? That's all I gotta say.
Listen, folks, you stay right there. We got our man Basil Chapman coming up next. Nico and Paige are going to keep you healthy. Darrell's going to be right back with you. Dave White and myself. Darrell, thanks so much, man. Have a great one. We look forward to the show this afternoon.
All right, man. You have a good one. Thanks.
Stay right there, folks. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.